Hello everyone. How are you? How is it going? Hello everyone. How are you? Hello the G stream. Let's go. Okay, maybe too hyped this morning. I'm very happy that you're hyped. I'm also hyped because I'm doing my favorite uh, activity. I'm live streaming with all of you, trading all together. Hello, Monica. Nice to see you. Good morning. Unk. Hello, Jose Barreto. Good morning, my beloved friend. How are you, Pat? I'm doing very well. We had a small celebration here yesterday in Greece. It is like a mini carnival. Uh, uh, let's call it a small carnival day where everywhere the people are dressed with costumes and they grill meat all over the place. Oh, my wife, I love you. Thank you so much. She bring me, of course, my Freddo, my espresso, not my Freddo, my espresso. Hello, my friends. Day 4 of today's masterclass. Today we are going to talk about the fractal model and what exactly it is. It is the specific pattern that we are going to look for so we can frame our entry. It will be the fractal model, will be our trigger that now I'm searching for a trade. Trust me, only if you know what exactly we have presented until now, trust me, you already have a full trading plan, very detailed. Although we are going to do 2 more master classes, the next ones will be on order flow, and we are going to summarize everything at our last masterclass so we can have a step-by-step mechanical entry. And as I said, of course, in my previous stream, that I'm going to introduce also an extra entry model for the members of TTF in private, of course, not here publicly on YouTube. Publicly on YouTube, we are going to introduce the first way, the price action way that we're going to enter. So, let's begin. Day 4, the fractal model. Day 4 or day 6? Day 4, yes. Day 4, the fractal model. The purpose of this lesson will be to introduce to everyone a specific pattern, that it is a combination of liquidity and, of course, one of the most powerful sequence of candles that no one can imagine how powerful it is. Remember what I said, my friends, we are going to see specific things, a specific candle series that of course will remind you, especially if you are members here of TTF, and either you are, either not. Now it is time for me to please ask from all of you, if you want to help us, please hit the like button. It helps us a lot with the algorithm of YouTube. If you're not subscribed to the channel, of course, hit the subscribe button. And whoever wants to be member of TTF, link in the description, trdfloor.com. Let's continue. The fractal model is a technical analysis framework. It is deeply rooted in inner circle trader concepts, ICT concepts, like liquidity sweeps and fair value gaps, but it organizes them into a mechanical multi-time frame system designed to anticipate how a higher time frame candle will form. And its core, the model identifies swing points and treats the formation of a single candle as a mini cycle of reversal and expansion. Please take a moment, read this again, because try to understand, my friends, how everything lines up all together, all the concepts that we have talked until now, how we are going to use them from the open, high, low, close concept, the power of three, PDRAs, our daily bias, our edge, all of these combined, all of these things combined, now we are going to frame even more what we want to see exactly every day in the charts. The number one, the core concept, is the candle numbering. The model breaks down price action into a sequence of 4 candles, usually viewed on a higher time frame like the 1 hour or the 4 hour. Candle 1, the candle that sweeps liquidity or hits a point of interest. It sets the stage for a potential reversal. So, let me drink some coffee so I can continue. The first candle will be the trigger. It is sweeping. For example, what do we mean a sweep of liquidity or hit a point of interest? What is a point of interest? A higher time frame, for example, order block. A higher time frame fair value gap, inventory fair value gap. These are all points of interest. Okay, what can be a liquidity sweep? It's going to sweep, for example, a previous daily low, a previous daily high. It is going to sweep a previous monthly high, low, a weekly, all we talked about in our previous lesson. So this will be our trigger. Candle 1 is our trigger. Candle 2, the reversal candle. This candle must form a swing point, a high or low, flanked by a lower high, highs, higher lows. The fractal model focuses on identifying when C2 has locked in the top or bottom. So, you all know a swing point is the lowest point of a sequence of 3 candles. Yes. Look, we are not searching to trade the reversals. But when a higher time frame reversal happens or it finds a support, what do I mean by that? For example, it's not for sure needed this to be against the higher time frame structure. So if I have a 1 hour bullish order flow, and that we're going to talk, of course, in the next masterclass, if I have bullish structure, this reversal, the reversal candle can happen in a fair value gap and a bullish fair value gap when price is pulling back on the 1 hour. And a small tip, how we can easily identify the candle 2 candle is this candle will sweep the previous one that entered into the point of interest. Okay. Candle 3 will be the expansion candle. Once C2 confirms the reversal, C3 is expected to move aggressively in the new direction. This is often considered the bread and butter trade. This will be the candle that we are going to trade, candle 3. Here, we are going to apply all the concepts towards the direction that we created our higher time frame trade idea. And of course, we have candle 4, the continuation candle, follow through momentum after initial expansion. We can also trade C4, the candle 4, but it is less probability because most expansions happen during candle 3. If it is a strong trend, candle 4 will also continue towards that direction, but it doesn't happen so often. This is exactly how it will look, the pattern. This, of course, is a bullish example. Price, this is candle 1. Okay, this is candle 1. This is candle 2. And this is candle 3. Here is where we want, my friends, here, candle 3 is where we want to search for our trades. The three-step logic. Sweep, candle 1. This sweeps the point of interest or the liquidity or the low, the high, whatever it does. This is the candle. Candle 1 is what triggers our trading idea. The swing is candle 2. A fractal high or low forms locking in the direction. Look what a small trick it is, because based on ICT, swing point is where we have the lowest wick. Smaller wick to the left side, smaller also from the right side. So it is a second sweep of the previous candle. That is a swing low, okay, or a swing high. A sweep of the candle 1. That's how we can easily spot candle 2. Okay, and the expansion candle 3, this is the trade zone. You enter on a lower time frame, shift to ride the move as the candle body expand towards its target. This is candle 3. This is the candle that we want to always sweep. Roy G says AMDX. It's not exactly AMDX, but we can use a similar entry model based on how that the candle 3 opens. Okay, but it's not exactly accumulation, manipulation, distribution. It is something similar, but the logic is different. We are specifying this pattern because it is a candlestick pattern in a higher time frame point of interest. And you guys that are members of TTF, I would like you all to identify what this pattern also, what this pattern also reminds you. Imagine that we have one more candle over here, one more bearish candle. Does anything? Yes, exactly, PGA. The 3-line strike, exactly. It is the favorite pattern of RT. The 3-line strike, exactly. The 3-line strike. Although we are going to add over here the liquidity sweep. The 3-line strike only needs, it could have a smaller wick, not a grab of the previous candle's low. If it engulfs, if we have 3 bearish candles and we have 1 bullish engulfing, that is the 3-line strike pattern. But we are going to expand it even more, and we are going to put over here a wick, a liquidity sweep. So it will be an even more advanced 3-line strike with a liquidity sweep upon it. Also, I would like to add something, that it is not part of the rules the candle to be an engulfing. It can also be a lower, a smaller candle, but when we have also the candle to be engulfed, then it will be even more high probability and even more strong, showing to all of us that we have momentum. Okay. In summary, the fractal model is a mechanical approach to market delivery that strips away the complexity of traditional price action. Instead of guessing where the market is going, it focuses on predicting the behavior of a single candle. By identifying a liquidity sweep, candle 1, and the formation of a swing point, candle 2, a trader can anticipate the high probability expansion, candle 3, with precision. It essentially turns the wick of a higher time frame candle into a lower time frame entry signal. So simple. So simple. Remember what I have been talking to all of you all this time. I'm saying to all of you, a trade idea inside a trading idea. You will hear me also many times telling to all of you that the only thing that we need is 40 points per day or 20 pips trading Forex to change our lives. We don't need to catch these huge moves, or if we catch them truly, it will be one time per month, because as I have said also, there's no need for these big RR trades in order to make money from the markets. The only thing that you need is to have the same approach every day, the same way how you establish your bias, the same pattern you want to see, the same point of interest, the same, everything to be the same, so we can have a full trading plan, a full trading idea in order to be able to execute as mechanical as possible. Thank you all, of course, for your attention. If you enjoyed what we did over here, please hit the like button. If you're not subscribed to the channel, please hit the subscribe button also. And whoever isn't part of TTF and wants, of course, link in the description, trdfloor.com. Let's go to the charts, and of course, I would like from all of you to help me and tell me if you, of course, understood what we just said over here, of course, and if you have any further questions, I can go even more in details, but you see how simple it is, and how even more simple it can be in the future, because we are going to use step by step. Let's go to the charts. Before give me a sec, please, to connect my account. Of course, I forgot. My friends, I forgot. Okay, now I'm ready. Okay. Unk says, thanks, Alex. Which higher time frame would it start from? Well, There's no right or wrong. I introduced to all of you certain time frames that you can use. For example, you go from the daily to the 1 hour to the 5-minute entry, or you can just go from, the weekly 4 hour, 15-minute, 1-minute entry. We can do a lot of adjustment to that. For example, I am a lover of the 1 hour time frame, but I'm also a lover of the 1 minute. So who tells me that I can't create one hour point of interest, for example, 1 hour point of interest, and just find also the fractal model in the 15-minute and enter on the 1 minute. You understand what I mean? For example, let's take a look. You see, we have, if this candle ends in 6 minutes green, okay, this will be our swing low. It has took liquidity from here, look, it has taken liquidity from this. It is also, look over here, it is also in a point of interest. This is a 1 hour fair value gap. Okay. Here we have our swing low formed. Let's go and see also. Do we have, look, price at the open, run upside, took Asian high. Although we must notice that in the 1 hour, we are for sure bearish. Also in the daily, remember what we said on our previous live stream, that price, we must pay attention, price is exactly at the daily EQ. And of course, we saw this momentum yesterday. I won't be surprised if I see, of course, lower prices, because our main point, our daily liquidity, drawn liquidity, is for sure this low. Why? Because this swing low, if it will be taken, we will create a break of structure. So I am expecting lower prices, of course. So the best trade idea for me now is not, of course, taking longs. We could take longs based on which idea? This was yesterday's push. This is the leg that caused this push. So we could trade the idea from this swing low to the equilibrium of this leg. Because if somewhere price is going to reverse, will be probably at the golden zone and then continue its bearish price action. The problem that I'm seeing is, of course, that we don't have any other liquidity. That's why I would like to be patient, because in general, after this push, markets are consolidating. Let's take some time, take our time and look and wait things to happen in front of us. Because now price, you see, is all over the place, sweeping highs, sweeping lows. In general, we are in a consolidation. Got it, thanks a lot. You're welcome, my friend. Have you understood everything, my friends, that we talked about? Let's, for example, where can we find something? Look, for example, over here. What happened over here? Price went inside with this candle. We went into the point of interest. That was what? This is, of course, this push. Look, price was exactly at the equilibrium. What did we have over here? We had this fair value gap. This candle came into the point of interest. So we would like to see things happening over here. And what are we going to find? Look what happened over here. This was candle 1 that we entered into the point of interest. This is candle 2, and if we were lucky enough and we weren't stopped, we could enter over here playing the power of 3 of which candle? Of the next one. This was the 15-minute open over here. Okay, this was the 15-minute open. What could we do over here? Open high, because we are expecting, look, key, crucial what I'm going to tell you now. What would we expect to see? Bearish price action. So we would like to see an open high, low close candle. What happened over here? Price opened high, went above the opening price of the 15-minute. We could take, of course, the shift of the 1 minute. For example, if we saw over here this breaker block, we could have taken this trade. We would have probably taken a loss, but if we insisted and we waited for the next shift that happened, we would have over here a really nice trade, covering, of course, the fair value gap, 1 to 2. Boom. We would have a winner. Is it completely understood? I promise to all of you that I'm going to do an extended backtest session so we can all see the patterns again and again and again. The 1 hour candle closed. We also have a 4 hour closer. Look where we are also. We are in also a bullish fair value gap, 4 hour. So it is the same thing as the 1 hour. There's no need for me to mark it. But the most important is that we might see a pullback today because price is in a bullish PDRA. But for me, the most high probability move, based on what we are seeing from structure and from order flow in the 4 hour, that the high probability trade would be priced to come to the golden zone, to this fair value gap, bearish, and over here will be the area that we must short to the drawn liquidity down here. Is it completely understood what I'm trying to tell to all of you? If your appetite is weird and you want every day to take trades, of course you can take the move towards the equilibrium. No problem about that. But you must understand that you're going against all this move. Now, if I see price go even lower and break this fair value gap, I would like to trade the inverse idea. For example, if I saw this fair value gap being broken in the 1 hour, I would love to take the trade, the continuation lower from here. Remember, it is always ideas inside ideas. Let's go to the 15-minute. Be patient, of course, and see what will happen. How was your days? How was your trading this week? After the very nice trade that I took on Monday, I'm losing since then. I'm having bad days. Yesterday I wasn't able to trade at all. On Wednesday, that was before NFP, was bad. No, Tuesday was before NFP. We had NFP on Wednesday. After my winner on Monday, multiple losers. Unfortunately. Unfortunately. Pat says, very good after a terrible start. Monday, hit my target today before market opening. Didn't even need to trade Dow. I'm very happy, first of all, for you, Pat, that you are beginning to change perspective in general. And I mean this because we must always be, we must always not be greedy. Because being in the markets more doesn't mean more money. Most of the time, it means losing money for sure. Louis says, sorry to hear you've taken losses. My trading has been good but limited, very busy at work and can't find the time to hit the charts. Well, look at this week as a disciplined session, and that you are trying to increase the levels of your patience. So be patient. Crypto is going up. Unfortunately, Greek stocks, bank stocks are going down. Mhm. It is logical. All the other, stock markets always follow what the U.S. stock exchanges does. So it was logical after yesterday's drop. The all around Europe, you will see all the stock markets were down today. Pitley for me took 2 losses this week. Winner from yesterday puts me to overall 0 - 0.5 R this week. It is an amazing result. It is an amazing result, my friend Pitley, and I mean this. 0.5 R is nothing. Proig says price is fanatically fighting up and down. Of course, because I have a stream publicly on YouTube, that's why. That's why it is fighting up and down, because it doesn't want me to take any good trades live. If, of course, my friends, you are enjoying what we are doing over here, please don't forget, link in the description, trdfloor.com, my friends. trdfloor.com. Okay. Haha, says Roy G. No, it is true, my friend. It's true. It's true. I'm trading today publicly on YouTube. That's why it's going in a range. That's why. That's why. This is one more edge to all of you guys. When Alex is streaming, don't trade. Because many of us struggle when we must trade or not. When Alex streams, it is a no trading day, no trade day. Now it is pushing for some reason again that no one understands why. This is the reality. Pure consolidation, pure consolidation. Okay. Do we have any couples? Are you going to celebrate tomorrow's Valentine's Day? Who is in love from chat? Who is in love? Thanks, Alex. Really appreciate the kind words. I'm telling what I'm saying is true, my friend Pitley, and I mean this. After so many years of trading, trust me, 0.5 R is nothing. Pat says every day is Valentine's Day for me. Me too, my friend Pat. Me too. PGA says 35 years in love. Wow, amazing PGA. Amazing. I'm so happy for you, really. I'm so happy. I'm so happy that you are in love for so many years. Love is one of the most beautiful feelings that we have. This is the reality of how things is. Without Because love is our motive for many things, to get out of our comfort zone, to of course do things for the ones that we love, like learning to trade. Monica says 19 years married. Well, I am exactly 13 years. 13. I'm 13 years married. 13 years. 13 or no, yes, 13. Yes, 13 years. I'm 13 years married. As I said, really, of course, we must not only think about our beloved ones when it is Valentine's Day, but it is really nice extra opportunity to buy a small thing for the ones that we love. A small present. A small present. Well, I won't lie to you guys. I don't like at all this price action. I hate it. I hate it. I really hate it. But we must be patient so we can probably see what can happen. For now, I'm not interested in any kind of trade. What is the RIDR doing? Okay. Price is inspecting the Asian DR all day. But this means nothing. I'm not seeing something. Algo 2.0 says maybe it takes out Asia high and then dumps. It has already taken Asian high. Based on the ICT concepts, the Asian session is between 8 p.m. New York time until 12 o'clock. That is the Asian session based on the teachings of ICT. In general, I know it is from the beginning of the day, and many traders take the beginning of the day as their Asian range, but the timings for the Asian range based on ICT is, as I said, from 8 p.m. to midnight exactly. New York time always. Look at the long which says PGA. Whoa. Okay. 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 At least from what I'm seeing now and what this shows to us, of course, it shows us and this that buyers or sellers are, of course, fighting during these 4 hours. But we can also take this low as a swing low that is in a bullish PDRA, this fair value gap, and we could take a trade towards the equilibrium and then try the continuation low. But it is too risky. The only thing that I don't like it is that it is so risky, and for sure the trend is my friend in this one. Pat says, let's see if it will break the Asian high. I'm not liking this either. Yes, I don't like it at all. Interesting. I have to check that my indicator that marks the session is in tune with what you said. For the session markings and all, it is a very big indicator. It has so many things to show up on your charts. I have disabled most of them. It is named ICT kill zones and pivots from TFO. He also has many ICT indicators. Free, of course, free. I'm sorry, but I'm a little bit tired. That's why you are seeing I'm all the time. It was a difficult day for me yesterday and it continued today, so I'm quite tired. I'm going to take, of course, a weekend so I can rest a lot. I will prepare what I have to prepare for next week, and then I will take the time to rest a lot and sleep. Pat says, wait, sorry, PGA says a huge fair value gap on 4 hour time frame, maybe to be filled. Yes, of course, because the most simple concepts that everyone can use, for example, in order to find the drawn liquidity, is that price always seeks for liquidity and rebalances imbalances or fair value gaps. So in this situation, it has taken, for example, these lows liquidity, but it could also rebalance this 4 hour fair value gap, this bearish one, and continue where to seek for liquidity down from internal to external liquidity. Internal is all the imbalances fair value gaps. The external liquidity is all the lows where we have liquidity resting below them. From internal to external. Internal to external. I hate this price action. Oh, sorry for that, my friend. Sorry. I'm sorry. I've got okay, yes, of course. Algo 2.0 says, I'm also still carrying something that I brought with me from the flight from Nepal. Some background cold. I hope the weekend will be helping. I hope so, my friend. Of course, I hope you. I hope you will have a very nice weather. Algo 2.0 says, thanks for the indicator. I have loaded books. Looks good. Yes, it is very beautiful. 2000% customized. You can customize it as much as you want. Come customable. Okay, leave it. Pat says it's powerful. He's talking to Algo. It's powerful if you can set it correctly. I've gone for a few dumbed down versions of market sessions. Well, I have been using this indicator to mark my sessions for multiple years. As I have said to all of you, I always take a look of certain price action levels like Asian high, London low. There's no need, of course, for you guys to be an ICT trader because in order to search for these levels, because these levels are important for the traders many decades now. Not that ICT came and discovered the previous daily high or the previous daily low. Okay, that's so easy. Well, remember, based on, of course, based on our edge, yesterday we had this bearish candle. Price has swept the previous daily low. Okay, the previous daily low. So we have we have 66% that price will close below this daily open price. Below this, so it will form a bearish candle, a continuation candle. Monica says my markups, fair value gaps, imbalances are usually always on point. Eventually, price goes back to my imbalances I have marked up. How do you, Monica continues, of course. How do you interpret when price just touches the imbalance, but has completed filled it? I have been keeping that point waiting for it to be filled, correct? Yes, but if it leaves without it, if it rebalances that imbalance and rejects it, I could keep it for multiple days so you can show me which PDRAs are prices reacting from. So it can remind me that we have bullish or bearish order flow. Okay, so I don't go against that. Those are the days that I'm going to keep it. But the concept that if price goes to the 50% of it, of course, it is valid. Of course, price has been rebalanced. So there's no need for price to come join it again. The problem is that we never know when a fair value gap will hold. That's why we added today the fractal model, so it can help us identify when what I was saying, I forgot. Sorry, I meant has not completed filled the imbalance. I'll tag you on Discord on my example. Okay. Well, even a touch is enough. It doesn't mean that price must always go to the 50% and above. Okay, of the fair value gap, I mean, of the imbalance. A small touch means that probably either many of the orders have been cancelled, for example, or they're not interested in rebalancing price that time period. Even a small touch is enough. But of course, tag me so I can take a look what you exactly mean. Maybe I haven't understood what you exactly meant. Well, I hate this price action. I want to sleep on the desk when we have these trading days. It is very, very bad. Although I have good performance in general on Fridays. My performance is good. Algo 2.0 says this price action is just horrible. It is miserable. Of course, I'm not interested in trading this thing. For sure. I hate what I'm seeing. The only reason I would trade now would be if I saw the break of this fair value gap and take a really nice continuation from here. Or I could wait for price to come up here. I don't know. For sure, I'm not interested in trading anything. Let's take a look. Let's take a look at Euro USD, for example. Now, this is a really nice example. Look how the same model, look what I'm going to tell to you. Look how the same model is able to be applied in all time frames. Price came over here, yes. This was the trigger the first candle that came into the point of interest, that is this daily fair value gap, but it never created a swing low. Candle 2 must be lower than candle 1. Look, candle 2 must be lower than candle 1 to create a swing low. But where did the swing low form? Over here. What happened over here? Consolidated 3 days. Here the market opened low. Look, bearish candle, yes, swept the low, and what happened? Create candle 2, and this would be the day, candle 1, candle 3, and look what day it is, Monday. Monday. Look what a candle you could have traded. So the fractal model is applicable everywhere. This was, for example, Monday, Tuesday, Wednesday. Okay. Monday. Look. Came over here, our trigger. What I would like to see, a swing low to be formed. Even over here, where price came inside, this is a daily fair value gap. Okay, what is this? This could be, this is, for example, New York low. What would happen? Sweep of this liquidity point, candle 1, candle 2, and over here, what is this? The opening price of the 1 hour. We could, of course, took this really nice continuation, although we would like to see the candle to open low, high close, to go beneath. It's 5 o'clock, Sunday, Monday, what? Why? I marked something wrong for sure. 2 o'clock, yes, 2 o'clock. 2 o'clock, 15 minutes. Yes, it's correct. Okay, I would like to see an open low, high close. If I took this continuation, it would be a really nice trade, but I don't like chasing price and try to enter, for example, from this fair value gap, that it is in discount of this leg. Okay. I would wait the same pattern to happen in a lower time frame PDRA, or even a 1 hour one. Okay. But interesting, what am I expecting? I'm expecting price to go higher in general. Whereas the drawn liquidity, it rebalanced from internal liquidity to external. Internal to external. Price has also rebalanced this big daily fair value gap also from this side of from the right side of the curve. So I would like to see our fractal model to play out. Here could be a really nice opportunity. Sweep, look, sweep down here, sweep, took this low. What have we taken also? We have taken Thursday, Friday, previous daily low. We took previous daily low over here. Let me mark it. We swept over here previous daily low. Yes. So price came into the point of interest, created although here by the tick it didn't take it. This was the candle that took it. But what do we have formed over here? A swing low. Why? Because price, this candle took this low. So we could go and be able to trade the candle 2, candle 3, sorry. This is the opening price of candle 2. Price went below the opening price. I could look exactly from this area from here to see from this area over here to find, because price went open low to high close. So we could wait in a 1 minute and we could have taken an amazing trade. Where are we exactly? Okay. I hope that you understood the idea in general. Let me mark this candle. Where am I? Why am I so lost? Okay, yes, 15 minutes. Here was price. Yes. Look, here we had the shift. What is this? Candle 3 of the 1 hour time frame. What happened over here? Price broke. We could have entered at this point, covering the low and going for a really nice 1 to 2 that would have played out, of course, after multiple hours, but it would have played out. During London, all of this, of course, yes. Yes, yes, yes. Exactly my thought says, Algo, I could see a sort of the last two highs, one prior to Asia and one has printed just recently, but I did not take it out. Louis says, unfortunately, I have to jump back into work. Thanks for the education, Alex. Greedy, appreciate it. Have a wonderful weekend. Thank you so much for joining, my friend. It means a lot, and I mean this. Thank you so much for joining. Enjoy your weekend, and of course, if you are going to go out tomorrow, I hope you enjoy whatever you do, and happy Valentine's Day. Monica says I have to go to work now. Have a great weekend all. Have a nice weekend also, Monica. NQ is taking off, says Algo 2.0. Yes, it is indeed. It is. But as I said, the best idea that I would like to see would be the most high probability would be this trade idea. From this is a fair value gap that we would like to see price, that it is exactly in exactly at the equilibrium. Exactly at the equilibrium. PGA says, I think on BTC USD 4 hour time we have a very good example, low of 5th February, BTC. Oh, yes. Yes, exactly. Although, to make this model even more high probability, we need a point of interest. We could say that this bullish order block over here is a 4 hour bearish bullish order block. Okay. Exactly. This was the candle that came inside. This was the candle that came inside. Here we didn't form a swing low. Why? Because it didn't sweep the previous candle. Also over here, look what is the trick. This is the candle that candle 1 that comes again into our point of interest, but candle 2 didn't sweep this low that came inside. Okay, if it had swept this low, then this would be candle 2 and our swing point, so we would trade candle 3. Okay, my friend PGA. I know it is quite difficult to understand it in the beginning, especially if you have a teacher like me to explain things, but you will see that you are going to understand the pattern as more as we talk about it all the time. You will see how you will be more it will be more easy for all of you guys. This is what I'm looking at. I love also the idea that we have went above the daily open, although you see by yourself that now that in general price is in a big consolidation, the edge isn't performing so good. There now we are during the days where most of the statistics are against us in many concepts. So imagine that today we expect, based on the edge, remember, we are expecting a bearish daily candle. Why? Because we have swept the previous daily low. Yesterday's candle was bearish, so we have 66% that price will will continue bearish. Well, my friends, unfortunately, I'm going to end the stream today early. I'm not finding any interesting in trading today. This is to be 100% honest with all of you. Unfortunately, of course. Well, indeed, I'm going to wrap it up. Or if you want me to stay, we could wait to see if price will go up to our point of interest. What would you like us to do? I say that we'll call it a day. Have a nice weekend. Happy Valentine's Day to everyone for tomorrow. Take your time to, of course, look again at the videos. Make slowly and step by step your plan so you can understand what you are expecting from the markets. Of course, take the time to rest. It is very important to take our time so you can come on Monday fresh to have a new start. Thank you so much. Have a nice weekend. See you all. I really hope everyone will spend the best of their time. Thank you so much. See you all next week. Thank you, my friends. Bye. Thank you all. Thank you so much. Bye.